Hello and welcome. You're watching Money 9. I'm Sakshi Batra, and this is India's first multilingual platform for personal finance from TV9 News Network. On this show, we are going to be discussing about stock markets after the record high, what's next for the stock markets, and what should be all the investors doing. Joining in is a very special guest, Mr. Ambareesh Baliga, who is a market expert, market veteran, and an independent analyst of the markets, joins in on Market Masterclass. Thank you very much, Mr. Baliga, for joining in. It's a pleasure to have you with us on Money 9 and on Market Masterclass.
Thanks for having me, Sakshi.
So, Mr. Baliga, we are seeing that the Indian market is going from strength to strength. There is momentum continuing to build on, and they're reaching new record highs. But I want to ask you, is this irrational exuberance or is there merit in this rally?
So, see, always people say it's different this time. But I've been in the market for the last 3.5 decades and seen number of bull and bear runs. Basically, it is different players and a different storyline, but the overall it's the same story which gets repeated at the end of it. And because of which, clearly, I see that this time it is. As of now, it seems to be a irrational exuberance. Especially with this second wave, which we have already seen in the last 2-3 months, and post that we are now seeing downgrades in the economy. People who are talking of 12.5%, 13% way back in January 2021 have today brought down their expectations to about 8 to 9%, and I'll not be surprised if it comes down further to about 7% or below. So the question is, can the listed entities continue to grow at the earlier expected rate? For the current year, which is FY22, because last year, if you see the bigger companies, especially the listed ones, could actually snatch a good market share from the smaller ones, and I think this year also we may see something similar play out. However, I don't think we'll see the sort of recovery which we saw last year getting repeated this time. So, because of which we can expect a downgrade for earnings, especially post the Q1 FY22 numbers are announced. I think post that we could see some downgrades. And generally, liquidity is a friend of the trend. And once it turns down, your liquidity can actually disappear overnight, which can actually lead to a major fall.
Okay, so liquidity is the friend of the trend, and there could be some downgrades coming in. A word of caution on the markets. And all of you who are watching us on YouTube, you must like and subscribe to this video and our channel as well. And also hit on that bell icon so that you can get notified whenever we post this interesting kind of video with all our market experts as well. And do follow us on all our social media platforms as well, Twitter, Facebook, LinkedIn, and Instagram as well, where you'll get all the updates of markets and personal finance. Mr. Baliga, let us also understand, now that you have put out this caution, I want to ask you, how should one really approach this kind of a market? At these record high levels, there is temptation to sell. But what is making money right now for people is buying, participating, and not selling. So how does one deal with this whole confusing thing?
No, right now I suppose the greed is at the highest. So people are just, holding onto their stocks. Those who are selling are actually regretting selling earlier. But then one should remember that nobody can actually call the bottom or the top. But when you feel that the markets have turned expensive, especially, as far as I'm concerned, the markets have turned expensive. So it is time to book out. So you may actually miss the last leg of the rally, but I think one should learn not to regret. So instead of regretting, I think one should learn from the mistakes, because regretting can actually make you lose the next opportunity. Because finally, this whole stock market and investing is actually a mind game.
Yeah, absolutely. But are we in for any kind of shocks? Would you say that? Because I know that you've spoken to me earlier, and in my articles also you've given comments about, market cap to GDP and overvaluations. So are we running out of time here?
I think the writing is clearly on the wall. Even if you look at whatever data points are coming, even the latest GST collection, that is lower than expected. You're looking at the auto sales and the white goods sales. Everything is much lower than what it was in the previous few months. You've been having job losses, but I think liquidity is clearly forcing the people to look the other way. And clearly, such liquidity, such continuous liquidity flows converts a lot of naysayers who finally get carried away and start buying. So I think this rally can continue a while longer. But clearly, I think we have a choice of staying out, and I've actually chosen to stay out. I've been booking
Okay.
out and staying out for a while. Let us see as to what happens going ahead.
Okay, so you've chosen to stay out right now to wait and watch and to see how the markets really go on from here. A lot of experts are also talking about, rotation happening in the sectors and the buying we are seeing kind of shifting from sector to sector. There are cyclical sectors that some of the experts have talked about that perhaps industrials, financials, and consumer discretionary are seeing the next tide of buying coming in. Is there any particular sector in your mind that you're looking out clearly at this point in time, also waiting to get into, which you could believe that perhaps when the next leg of rally starts, these could be the sectors that could be driving factors?
So, I mean, first of all, I really don't expect this rally to continue for much, much longer from here. But
Mm.
whenever there's a relentless bull run like this, investors are in continuous search of what next. So you look for stocks and sectors which are relatively undervalued compared to the sectors or stocks which have performed well in the recent past, and
Mm.
then the action shifts to, I mean, those sectors based on the sort of news flow. I mean, we've seen the steel sector really performing, I think, the
Yeah.
best in the decade. And in the last week to last fortnight, we saw that the sugar sector, which was completely ignored, has started performing. If you remember, I mean, a year back, I mean, just after the first wave, we had FMCG really shooting up, and post that it was banking and finance, and then specialty chemicals. So clearly, I mean, there would be sector rotation all the time, especially in a bull run, and people would be looking for those sectors which are looking relatively undervalued, not
Yeah.
in absolute terms, but relative terms. And I suppose this game goes on as long as it doesn't peak out.
That's true. Are you big on this unlock trade at all? A lot of people are now talking about now that we see this unlock happening in many states. Some of the sectors that were badly affected to come into flavor now. Is that a space that investors should keep an eye out on?
So, like I said earlier, I don't think this unlock trade will be as big as what we saw last year. Uh,
Hmm.
in fact, I've been saying this for a while that the emotional damage this time is much deeper and wider.
That's
So,
true.
I mean, consumers may actually take a very cautious stand and try to save wherever possible, because I think most of us would be actually fearing a third wave. I just hope it doesn't happen. But at least
Yes.
as long as that fear is there, people will not really go out and spend like the way they did last time. And if you remember, I mean, last time the whole story was all about personal transportation and white goods. I mean, especially for your home and kitchen. I don't think I mean, that is going to get repeated this time, because I mean, especially as far as personal transportation is concerned, I suppose all those people who wanted to really have a personal transportation bought it last year, so
Yeah.
there may not be a repeat.
Okay, and also your take on the broader market space. This space is actually, outperformed in the markets. Is there value here? And if at all, in particular sectors, if you could highlight?
No, I mean, see, like I said, there could be some relative value, and some of them may actually have absolute value, but then there are very few in the market.
Yeah.
Like the sort of contract calls which I've been giving, for example, something like a Coal India or a
Yeah.
ITC. I mean, there is a huge amount of value in this, and it's been ignored by the markets till now, except for the fact that we've seen some sort of a movement in the last 2 3 days. And
Mm.
I mean, the other segment, which I think there's still a decent amount of value, are the railway stocks. Some of
Mm.
them have moved very well, but you have stocks like RITES, Railtel, IRFC. I mean, out of these, I think one or two have just started moving. But then
Yeah.
I think this is one space where there's some value. And when I talk of value, I'm talking of at least there's not much of a downside, because
Okay.
like at a point like now, I think one needs to see as to how much of downside is there as compared to the upside.
Hmm. Right. Also, one comment on the earning season that is now almost at the fag end. What did you make of the entire earning season? Is there merit in believing that the earnings could continue to grow from here on, or will there be significant impact of this second wave, which we'll be able to see in the next quarter or a couple of quarters from here on, before they again start to improve, perhaps?
So, see, I mean, when you look at the earnings season, we should remember that that is pre second COVID wave. And
Hmm.
clearly, most of the earnings were decent. Quite a few of them have surprised on the positive, and that's one of the reasons why we have seen this rally continuing.
Hmm.
But the question is that the next quarter results, the Q1 FY22, would be, in midst of the second wave of COVID, when we have seen most of the country actually under some sort of a lockdown, mostly restrictions, which is like as good as a lockdown. So I think the performance for Q1 FY22 will be quite bad. May not be
Okay.
as bad as what we saw last year. So you may see year-on-year growth. Now it
Yeah.
depends on how the investors and analysts read it. That it is better Y on Y, so the bull run should continue. But I would think otherwise because this slowdown which we are seeing now will continue at least for a quarter more. And again, no one knows about the third wave. I would like to speculate right now. But if there is no third wave, we could see some sort of an improvement from Q3. So for
Okay.
that, after this sort of a run up, I will still not continue to pay a premium.
Okay, understood that. I also wanted to ask you, sir, a whole lot of these new companies, unicorns especially, will now perhaps start to come and go to public. Talk about Paytm, Nykaa, Zomato delivery. All of them are slated to come out with their IPOs either this financial year or perhaps the next. Is this a space that investors should look at, because there is clearly a whole lot of interest happening? We are seeing all these very, very high numbers in the gray market as far as
Right.
the prices are concerned. So, how should investors look at it?
No, yes, I think these are very interesting sectors to be invested in, and each one of the names which are given have proven the leadership. And clearly, we need to move at times. And these companies could actually be the leaders in the listed space in the next few years. You look back in the last 20-25 years and look at the global indices, including our own index, your Sensex as well as Nifty. The way the composition has changed over the last 20-25 years. So don't be surprised if any of these companies finally land up in the index, and that will clearly show that these companies have a huge potential to grow.
Okay, on that note, many, many thanks, sir, for sharing
Thank
your
you.
views on the markets
Thank
on
you.
these particular sectors. It's been an absolute pleasure to speak with you and to get a sense of how should the investors really move forward with the markets from here on.
Thank you.
Thank you so much. And with that, we wrap up this edition of Market Masterclass for you. But don't forget to like, subscribe, and hit that bell icon on YouTube to understand and to get notified whenever we post a new video of Market Masterclass and all the other shows of markets and on personal finance as well. Do stay logged on to our website as well, money9.com, where you'll get all the latest information, news, and articles in this space as well. And also stay connected with us on social media and all our platforms, Twitter, Instagram, LinkedIn, and also Facebook. It'll be great to have you there so that you can also interact with us and help us understand what you would like to see on money9.com.